Hey, Melissa, we do have some early results from that Alabama warehouse. Remember, this is the second election, and it is much closer for the unionization side. 875 votes in favor, however, 993 against. Last year, they lost by an over 2-to-1 ratio. So the results are getting closer. There's more than 400 challenge ballots, so they need to sort out those before we get a final result. Remember, too, that there's another union vote being counted in Staten Island, and that shows at the moment that the union there has the lead, but they are still counting. We should get the results tomorrow. The takeaway, though, Melissa, is that unionization, the drive at Amazon, is gaining some momentum. We'll bring you more as we get it.
All right, Deirdre, thank you. Deirdre Bosa. And it's gaining momentum for other companies as well. I mean, Starbucks said a number of stores and regions vote on unionization, Pete, and to me that spells higher wages, good for the consumer, good for the workers there. How do you think it affects the shareholders, though?
Well, and I think that's why we've seen certain stocks that we really love and we know we use and we know that we see lines out the door, and we all know about Amazon. But I think that's right, Mel. I mean, when it really comes down to it all, these are going to be impactful, I think, to those companies going forward, which is why you look at Starbucks. Starbucks, remember, everybody seemed to love it when it was like $130 a share, and then suddenly nobody seems to like it when it's dropped back down. So I think that's partially because the nervousness of what is it going forward and how is this going to impact their earnings as we look ahead. And the fact, of course, that in China, things which is where their growth was really coming from, that was something that was shut down. So there's a lot of different headwinds that we're talking about here right now. But this is certainly something that I think everybody's been watching very, very closely, whether it's Starbucks or Amazon or others, where this is something that is going to be impacting what we're all going to be looking at in the forward markets. And that's what we're always looking at, right? We're never looking behind. We're always looking ahead. And that is something looking ahead that I think a lot of people are very nervous about.
Yeah, but looking back at the conversation we just had, I mean, wages here in the U.S., this is a big part of corporate earnings, right? So if you're worried about a stagflationary environment and you're worried about things like a wage price spiral, that's the thing that's going to weigh on earnings. Those are the things that are going to kind of, cause strategists to kind of rework some of those numbers lower. The only thing I'll just say is that if you're expecting all the growth from some of these U.S. multinationals, they're not having some of the same wage pressures as we are. Deglobalization is going to hurt them, and it actually make them even that much more competitive. And I'll take you back to prior to the pandemic, we were worried about automation. We were talking about universal basic income. And I guarantee you, all of these gains of these major consumer-facing companies, what they've been spending on is investing in AI. That's going to go back to automation. I'm just saying, I think it's going to be a smaller component of the workforce that's going to have the benefit of these higher wages once we have the pandemic and some of these geopolitical stuff in the rearview mirror. But right now, I do think this is a huge risk to corporate earnings for the S&P 500 this year.